What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a software company that just recently IPO'd. I think it has a lot of opportunity in the coming years, so let's not waste any time. Let's jump right in. All right, guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with growth stocks, penny stocks, anything I think can help us grow our portfolios. There's a link down in the description to my Patreon account. Come join the family. I'd love to have you. I did the first 50 patrons for just $1. That's the day one squad right there. I think we've got about 8 spots left. You'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along with that. So if that's something you're interested in, guys, come over. You can talk to me anytime you want. You can ask me any questions you got. You know, we can go through stocks or whatever it is, but come join us. You know, it's a great place. But guys, let's jump in. The stock we're talking about today is Uipath. The ticker symbol is just PATH, P-A-T-H. What this is a software company in AI, robotics, but what they mainly focus on is RPA. This is their website. What RPA is it's robotic process automation. So essentially what they do, the main part, is they build a bot or a robot to automate specific tasks within a business process. So they will go in and they will look at a business process or a corporation process, and they will say, okay, where are tasks that are, monotonous, repetitive, that we can automate? So whether that be data entry or filling out forms or sending messages or whatever it is. They've got some massive customers that they work with, guys. I'm talking Google, NASA, GE, a lot of companies in the Fortune 10, in the Fortune 500. But this kind of gives us an idea right here of what the RPA software does. Now, I like the RPA part of the business, but there's one part that I think is more important. So I'll kind of show you what the RPA is just real briefly. We'll jump into kind of what I think is the big meat and potatoes of the business that's really gonna, be important and give us the opportunity. We'll take a look at the investor presentation and we'll wrap it up. So guys, right here, what this is pretty much showing us is, let's just say that this task right here will take a human 5 minutes to complete. So this is for the, what in the heck is going on? This is for the healthcare improving patient outcomes. So essentially a human would receive the lab report, open patient record, enter lab data, open letter template, write patient letter, adds digital signature, emails letter, verifies it and sends it and records it and closes it. Now so what this company would do, Uipath, is build them a process automation bot that they would implement, and it would take it from 5 minutes per task to 1 minute per task. Guys, if you have 100 employees and it takes them on average 5 minutes, where you can take a bot and do it in 1 minute, you are literally doing 5 people's work in what is that? I don't know what that translates to, but 5 minutes, 1 minute. So you'd be you get it. You get the point here. You get the point here. So what the bot would do is it pulls the lab report, updates patient records, and alerts physician all in one swoop. Opens Action Center and clicks patient name, presents pre-filled form, reviews data, chooses letter template and submits bot instruction, creates, sends, and confirms, observe task confirmation or exception. So guys, it can do pretty much anything a human can do. It can look at the screen, it can enter keystrokes, it can do all of that. The beauty of it is it doesn't take vacation, doesn't get sick, doesn't need a coffee break, doesn't sleep. So guys, this can save companies massive amounts of money, hundreds of millions of dollars over the course of years. It can save them so much time, resources, and human error. You get a process automation bot. It doesn't really make mistakes most of the time because it does exactly what you tell it to do. So that's a big part of their business, guys. And from face value, I think that's what most people look at and what most people see as being the most important. However, after going through it and looking at it, I'm in the web design industry. One thing that I see being a more important aspect is the discovery tool. So it's discovery automation. Essentially what process mining is a technique to analyze and monitor processes. In a traditional business process management, it is done with process workshops and interviews, which result in idealized picture of a process. Process mining, however, uses existing data available in corporate information systems and automatically displays the real process. Guys, so let me just paraphrase. What I'm talking about here with the discovery tool is, instead of a human going in and seeing, okay, this is the process that needs to be automated, and then building a bot to automate it, what this process discovery tool can do is they can lay it out. It will literally sit there and watch you work. It'll go through and watch your process from start to finish, and it will learn and it will find each area that needs to be automated. And so it's essentially just taking all of this data from all of these different corporations, watching you work and building it and finding better, faster, more efficient ways of doing things. Uipath, their goal is to create completely automated enterprises within the next few years. I don't know exactly what day or what year or what projection, but I know it's within the next few years that they are trying to complete total automation, total enterprise automation, where the whole business is ran around these software and AI robots. Now, let me give you an idea of why I think that part of the business is more important than just the standard RPA building a specific bot for a specific process. The machine learning is huge, guys. Back in, I think it was last summer, there was a company named OpenAI. They built a robot or an AI called GPT-3. Which has around 175 billion parameters. The parameters is how many times they, can execute an equation, or how many, their brain, their thinking. To give you an idea, a human has 125 trillion synapses. So, guys, I'm not an expert. I'm not a robot builder, but you kind of get the gist there. 175 billion. Humans have 125 trillion. So complete massive difference there. But historically, over the last few years, when you think of an AI, you think of it being very specific to a certain task or application, whether it be driving a car, whether it be entering data, whatever it is. AI typically was built for one thing, to lift things, or to whatever it is, play a game, or however. But the GPT-3 is a general purpose AI, one of the first of its kind. So it can do a whole range of things. I mean, it can have realistic conversations that are believable, that you think is another human. It can write code based off of your description. So they have a little text box, and you can search this and it will show you a whole demonstration of it. But it has a little text box, and you can type in, I want a game that is, resembles Dungeons and Dragons, and it will literally, in a fraction of a second, build you the code. It will write you the code for that game. You can tell it, I want an app that looks just like Instagram, but has, these colors and, these features, and within a fraction of a second, it will spit that code out and show you exactly what it would look like. You can tell it, I want the buttons to be smaller. Vague things like that. Guys, that is massive. I'm in the web design industry. If I want to build a website, we've got to go in and we've got to write the code ourselves. And it can take us 10, 20, 30, 40, 50, 60 hours. This literally goes in and it will build you a brand new, beautiful website. It can look however you want it. You can say, I want it to look like Squarespace's website. It will do that for you in a fraction of a second. And it doesn't just do it with pixels. It actually writes you the code. It can write movie scripts. It can write news articles. It is generating 4.5 billion words per day. Guys, the reason why I'm telling you this is because the CEO of NVIDIA in their last event said that he expects to see multi-trillion parameter models within the next year, and 100 trillion parameter model by 2023. Guys, if that AI GPT-3 with 175 billion parameters can do all of those different things, and we humans have 125 trillion synopsis, and they are going to build an AI with 100 trillion, that's going to be pretty close to what we can do. Now, again, the reason why I'm telling you this is because if you think what the GPT-3 can do at 175 billion versus 100 trillion, it's unfathomable. You can't even comprehend what that will be like. Very, very sophisticated. Now, VCs, venture capitalists, investors valued Uipath at $35 billion for a reason. The data mining, the task discovery software, if they were to build an AI and implement this discovery task software, after it is used and learned data process automations from hundreds of corporations from their previous clients, and they hook it up to an AI, and it just sits there and continuously learns what it's doing and find ways to make it better, faster, and improve its processes, that AI could just grow at an exponential rate and get much, much smarter and intelligent. So guys, that's what I think is the more important aspect of this business, not just the standard RPA process automation, the discovery tool, because they can use it in AI and robotics and things like that, and it will sit there and learn and find ways to constantly improve and make those things better and better. And if you've got an AI with that type of parameters, it will get to the point where it's unfathomable how quickly it learns and adjusts and improves its systems. So let's jump in. Guys, so right now the stock is currently trading at $74.84. It IPO'd and started trading on April 21st. As you can see here, they have a market cap of $39 billion. They've got massive gross profit margin at 89% in their trailing 12 months. Their price to sales ratio is high. It's almost 21, price to sales, which is, you're paying a premium. Like, it is not cheap. The EBITDA margin or EBIT margin is 18, net margin is 15. Not very great there. Most tech companies like this lose money, in the beginning. Revenue of 607 million, revenue growth of 80%, net income of negative 92 million. Let's take a look at the income statement. So as you can see here, in January 2020, they did 336 million. In 2021, they did 607 million. Look at this right here. They lost $500 million in 2020, but they cut their losses down to $100 million in 2021, which is fantastic. Guys, this company has been around since 2005. They really didn't do much until 2014, where they only did $500,000 in revenue in 2014. Then they did $30 million in 2017. And then again, right there in 2020, they did 336 million. We'll look at that a little bit more in the investor presentation. But the one thing I did want to show you, in Q4, their last quarter, they became profitable. They did 208 million in their last fourth quarter, and they did 15 million in net profit. So guys, they went from losing $500 million in 2020 to losing 100 million in 2021, and in their last quarter they were profitable. That is insane. They're not only growing revenue at 80%, but they're cutting their net loss and bringing in profit within their last quarter. I mean, to jump from that big of a loss to being profitable that quick, huge. Now, is that sustainable? I don't know, but it is very impressive. If we jump in and take a look, I want to look at their cash flow growth, which is cash from operations minus capital expenditures. Where are we at here? Okay, so right here. So, look at that right there. Boom, negative 359 million to 29.2, minus 2 million, so 26 million, 27 million, looking good there. This is their investor presentation. I want to kind of give you some use cases, some case studies. Guys, obviously, I'm just barely scratching the surface here. You always want to go out and do your own research, but I wanted to put this on your radar because I'm going to start watching it heavily. I think I'm going to try to wait for it to come down a little bit in price, but I do really like it, and I think it's got a lot of opportunity. So right here for this SMBC, let's see, areas of focus: productivity and operations, saved them 3.5 million hours. For Uipath, the area of focus was finance, operations, compliance, technology, and customer support. It saved them 1.1 million hours saved and 400 robots deployed. Their testimonial was RPA was never a cost play. It was about speed of doing business and compliance, getting the benefits out of the workplace or workforce that we have never achieved before. In EY, it was HR onboarding and process mining for audit. 270,000 employees benefiting from automation. And then in Rogers, it was customer experience, call center, and field dispatch. $20 million in annual savings and reduced customer hold times. Guys, saving $20 million, like that's insane. Okay, so real quick, we'll jump in, take a look at their revenue. So again, guys, in 2019, they did 169 million, then 351 million, and then 580 million at an 86% compounded annual growth rate. This is their average run rate, excuse me. So this is their average run rate, not their full revenue. This is pretty interesting here. Scaling large customers that are greater than 100,000, average run rate. So they're 3xing that. So they had 305 customers that were over 100,000 run rate, and then 597 of them in 2020 and over 1,000 of them in 2021. Becoming C-suite priority, customers greater than $1 million average run rate. They had 21 in 2019, 43 in 2020, and 89 in 2021. Guys, 89 customers with over $1 million average run rate. Fantastic. This is kind of their business model here. Subscription model, billed annually in advance. Primarily 1-year contracts, and then pricing based on number of robots and users. Rapid growth at scale. They're doing 65% year-over-year growth in their average run rate. Expanding existing customers, 145% dollar-based net retention rate. Global customer base. So they've got over 7,960 customers, with 1,000 plus of those customers being over 100,000 average run rate. Sustainable gross margins. Their gross margins are massive, 95%, and then increasing operating leverage with a 4% free cash flow margin. Looking pretty good there. Guys, if they can continue to grow revenue and cut cost and get profitable in the next 3 to 4 years, I could see this company doing very, very well. Obviously, when we look at the chart, I mean, there's not much we can look at. They just IPO'd. If we go to a daily chart, there's literally 3 days. But you can see, it came right out of the gate at 65 bucks, jumped, ran all the way up to 70, currently sitting at $74. Again, guys, we are paying a premium when you're looking at their price to sales ratio. I didn't see any projections, so I couldn't give you a price to sales ratio or a price target based off that. If you do take the 80% though of what they're currently growing at, and if they can continuously maintain that, I can see this company doing very, very well. Again, guys, 74 bucks is a little expensive. I would wait for that to come down just a few notches. I would try to get it down here around the $60 range, $65 range. It just IPO'd. Let it cool off a little bit. Watch it. See if you can find a better price point. I will keep you updated on if I ever take an entry on it. But this is one that I'm absolutely going to continue to watch because I think the company's got a lot of opportunity. They're growing like crazy. They're dominating their industry. And if they can continuously improve that discovery tool and reach complete enterprise automation within the next few years, and they can get in and they can create deep learning discovery for AI and robotics, they will do very well. So that's it for today, guys. I just wanted to kind of put it on your radar, kind of give you my thoughts. I love the company, think it's very cool. I also think that this industry, it's disruptive and it will continuously get bigger and bigger as time goes on. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. If you have any questions for me, put them down in the comments. Come join us at the Patreon. We would love to have you. Like the video if you get any value out of it, and I'll see you guys in the next one. Peace.